Hello everyone. What if I tell you that there was a trade in Nifty on 15th of May wherein, let's say, you had traded a lakh rupee and you would have come out of that trade with a 5.5 lakh rupee. Yeah, it's true. It was a zero to hero trade on a 15th of May, and I am going to talk about this trade. Is this strategy sustainable or not? Let us jump onto it. So here I have a presentation for zero to hero option trade, yes or no. So let us understand what has happened on 15th of May 2025, a 24,500 call in Nifty around, I believe, 10:15 or so. It was trading around 112 to 115 rupees, and that went up to about 600 something, 600 plus rupees around 2 in the afternoon, 2 p.m. So it was a profit of around 4.5 lakh rupees on a capital infused of 1 lakh rupee in Nifty options expiring on the same day. Looks very lucrative, and I believe many option traders are looking for these kind of opportunities on the expiry day. They keep on putting in, let's say, 10,000 rupees or a 5,000 rupees or 50,000 rupees per week per expiry to experiment on these kind of trades, and sometimes they make money, sometimes they lose money. Sometimes they lose money, but often they lose money is what my understanding is. Is it a profitable strategy? We'll jump onto it, but let us first go to Nifty chart to understand that day's proceedings. So I have a Nifty chart in front of me. It's a 3-minute time frame. The day started somewhere here, right? So 15th May around 10:15, 10:30 on a 15-minute time frame, I could identify that this is where the ideally index should bottom and we should get some kind of a good up move is what my understanding was on this particular day. So somewhere here I could identify that now it is reversing from here, and from these levels it just jumped out, and the entire day gave a very quick huge momentum during the day, and it clocked around 2% move in a very short span of time, in a span of 2 to 3 hours, right? So initially the first trade, if we see on the options chart, the first trade ranged up till 300 rupees. Then again it was a consolidation for a longer period of time, and after that again it gave second opportunity. We can say safely above this level 252 it can be a good opportunity to trade. So this was the trade. This doesn't happen often. This doesn't happen every expiry because there are multiple things that are required for this trade to work. Let us try and understand that. So is it possible to do it? Can one trade such trades? See, there are 2-3 things that we need to keep in mind. Number one, zero to hero trade work in trending market. So there has to be a trending move on the expiry day. That is first requirement. So market must trend on the day of expiry, and trending move should take place in an hour or less. Let's say 1 or 2 hours. It should take place in that short period of time, which will help trader make money. Now with all these ifs and buts, you must have understood that this is something that does not happen every now and then, or not every expiry. So how do we look at it? In my opinion, this is not a valid strategy, and this cannot be a profitable strategy in long run, right? Why I'm saying this? Because zero to hero typically doesn't have a stop loss. Whenever you are trading for a zero to hero setup, you are expecting your trade to go in your favor at least 4x, 5x, 6x, or maybe more than that. And when you are expecting rewards which you have not calculated, then in that case the risk will always be the entire capital that you have deployed. So if you have bought an option for 100 rupees and then let's say that drops down to, let's say, 40, 50, you keep a stop loss of 30 rupees and you exit at 70, again you will feel that you should enter the trade, and then multiple stop losses will get hit. Unless and until you have a rule that I will try this trade only twice in a day, then maybe you will be happy accepting a 30 point stop loss and you will lose 60 points and just move out of the trade. But this doesn't happen. For a trader who is expecting a 5 or 6x returns, he will always try to time that entry. So either he is taking stop losses, so 2 or 3 stop losses will be taken, or otherwise he will just put in the entire capital, 100 rupee option he had bought, and he will just let it go like that. You have to have a strategy wherein you know the small stop loss, exact stop loss, and you trade the setup, not the opportunity. Second most important thing, the most important point why trader lose in this strategy is because they have never set any target. They just think that 1 लाख रुपया लगाया है, एक का 10 लाख रुपया आज के आज होना चाहिए, या 50,000 लगाया है, 50,000 का 5 लाख रुपया आज के एंड ऑफ द डे होना चाहिए. सो आर यू अंडरस्टैंडिंग द साइकोलॉजी बिहाइंड दिस? देयर इज अ ग्रीड दैट कम्स इन, and that greed ruins everything, you know. So you have to have a measurable target as well. So if you have that measurable target, you know when you want to exit, and not on the emotions or not on the market action that you're going to decide that no, let me just linger a 15 minutes more and see how it goes. The third most important thing, the momentum depends on many other factors like Greeks. We'll talk about Greeks in a separate video, but understand that all these things has to be there on the expiry day, and then and only then a trader stands a chance to make money. So what is the solution? What is the answer to this problem? There are threefold solution, three things that you have to keep in mind. One must trade a setup that he identifies, and he is comfortable trading a setup. Let's say if that setup is giving you 1:2, so 1 time risk and 2 time reward, or 1 time risk and a 3 time reward, this should be something you should be able to trade regardless of the expiry or not. You know, please understand this. On the day of expiry, the premiums are often cheaper, but then you decide that you want to risk only 3,000 rupees, you want to risk only 5,000 rupees, that is your stop loss. And on the basis of that stop loss, you are going to take the risk. Let's say you have decided that I'm going to take a risk of 30 points, and then my target is going to be, let's say 60 points or 90 points. So this is the setup. For this setup, you don't need an expiry day. Please understand this. This makes things much simpler, easier. So have a strategy which will give you a fixed 1:2 or 1:3. Both the things are important here. One time risk is important because you know how much you want to lose. And if you are in profit, you must know when you want to exit. So both these things are equally important. Next, trade a specific setup every time. Now, there is a method called, you just discipline yourself, try to do certain things in a certain way, and then that becomes part of your life, you know. So if you start trading a particular setup, maybe you identify some kind of a setup. I'm not getting into the setup thing here because everybody has their different niche. Someone likes to trade a momentum, someone likes to trade breakout, someone likes to trade swing. So everybody is different in their own individual aspect, and one has to find the sweet spot which is suitable to him or her, and then that will give you a much liberating way. So trade a specific setup every time. It should be the same setup. If that setup is not there, you are not going to enter the trade. If it is so simple, then in that case the consistency will help you win every time. You know, I'm not saying every trade will be a winning trade, but in a case where you are accepting a one time stop loss, so let's say 30 point stop loss, that is also a winning trade, because you know that once you hit a winning trade, you're going to make twice as much money, you know. So these things will at some point in time will make your mind peaceful, and then you will keep on doing the same thing again and again. Third most important point, keep your risk limited every single trade. So keep your exposure limited. On the day of expiry, typically people tend to trade more number of lots than they can afford. So it typically happens that regularly you are trading a 3 lot or a 5 lot position. I'm just giving a random example. On the day of expiry, you will experiment with 10 lots because the options are cheaper. But you know the risk is unlimited. You're going to lose that money. Let's say you have put in lakh rupee. So you stand to lose that entire 1 lakh rupee if you are not adhering to your stop loss rules. So understand this. So your risk should be limited for every single trade. Your exposure can be different, but your risk has to be similar for every trade. You have to understand this. So what is a hero trade basically? You don't have to gamble, but trade responsibly. So how you trade responsibly? Number one, you trade only one setup. Number two, you trade on the basis of a fixed risk and a fixed target. And the third most important thing is you keep your risk limited for every single trade. So if you keep on doing this, let's say I'll give you a task. So over next 10 trades, do observe how consistently you are being able to follow these rules. And do write to me in comment box if you find these rules, these solutions helpful for your individual journey as an option trader. Think about this and you can apply this similar method in your equity trades as well. Right? So this is how I am looking at this scenario. So a hero trade can be something wherein you trade on the basis of your money management and also your risk management with a particular setup, and that can be a winning strategy. Thank you for watching, guys. I'm signing off. Bye bye.